Hello everyone. Welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. See, we were preparing the cash flow statement, right? But why we are preparing cash flow statement? We are preparing the profit and loss account that shows the net profit. Again, why we are preparing cash flow statement? So, is the profit and cash are equal? Let us understand. Cash flow statement. Let us understand what actually cash means. Cash means here that includes cash and cash equivalents. Flow means increase and decrease in the cash or inflow and outflow of the cash. That means you will able to understand from where the cash is coming and where cash has been utilized. That you will understand. And increase and decrease in the cash during the year you will come to know while preparing the cash flow statement. Now you are preparing profit and loss account to know the profit. Then why again you need to prepare cash? Is both the profit and cash are same? No, never. Now profit. Profit will be, you will come to know when you prepare the profit and loss account, that in the accrual basis. And in profit and loss account, we recognize income, we record expenses, and it can be positive. But in cash, cash will be prepared based on the cash basis. Actual cash received, cash paid will be recorded in the cash flow statement and it can be negative. Now, profit always does not mean that you have received a cash. To know that, you need to check the cash flow statement because sometimes the report may show profit, but still the organization faces shortage of cash. That is why you can't decide based on the profit. There is no crisis in the cash. Then in cash flow statement, the activities are divided into three: operating activity, investing activity, financing activity. Operating activity, regular business operations will be considered. In investing activity, purchase or sale of long-term asset will be considered. Purchase means cash is going out, so we are deducting. Sales, cash is coming in, we are adding. Financing activity, here raising or repaying of funds. It includes capital introduced, bank loan or dividend paid. Now net cash flow will be considered by adding operating cash flow, investing cash flow, financing cash flow. This helps to know the increase or decrease in the cash balance, that you will understand. Now, what you have to understand mainly is profit and loss account measures the profitability, cash flow statement measures liquidity, and balance sheet helps to know the financial position of the business. Always remember that profit is just an accounting number because cash is a business reality and a profitable business can still face a cash crisis. Thank you for watching. Have a great day. And if you need any particular video on particular concepts, then comment in the comment section. I will try to solve your queries.